If you've been in Bitcoin for a while, you'll definitely have heard people, including me, talk about an upcoming supply shock. But how about if I told you this isn't just some distant possibility that may happen, but it's already started and it's literally happening right now. That's why Bitcoin has had such a great performance in the last 18 months, and it's only going to accelerate from here. So let me break down just how intense the shock might be and what it means for your portfolio. And actually, the core of what's happening comes down to arguably the simplest, but also the most powerful economic rule. Yep, it's all about supply and demand, baby. Now, we all know that Bitcoin has a hard capped supply, but that isn't going to make the price go up in of itself if we don't also have the other half of the equation, which is relentless demand. So what actually are Bitcoin's biggest demand sources these days? Well, there's quite a few of them. Back in Bitcoin's earliest days, demand came from the true believers, outsiders who were incredibly prescient before the rest of the world had even heard of Bitcoin or blockchain or crypto. And then by the bull run of 2017, Bitcoin is getting a lot more mainstream media attention. And in 2020 and 2021, there was a massive surge in retail interest in Bitcoin and really the broader crypto space. Plus, we got a first glimpse of what was to come later for Bitcoin as MicroStrategy and Tesla started buying. They were the corporate outliers back then. But this year has been crazy. We've seen an explosion of interest and actual buying from firms adding BTC as a treasury asset, and just straight up treasury companies that have no real business. They're just buying Bitcoin. It's been crazy. Well, of course, MicroStrategy continue to buy in absolutely just gigantic amounts of Bitcoin. It's crazy. They own 3% of the total supply of Bitcoin now. But just a few very recent examples of other companies coming into buy include ECD Automotive Design, Sequans Communications, Aurora Mobile, and many, many more. Basically, every single day we get 1, 2, 3 new announcements of a company buying Bitcoin. GameStop just raised gargantuan sums of money, billions more, which they can potentially deploy into Bitcoin in line with the company's investment policies. But at the same time, we haven't had a retail mania yet. Google searches for Bitcoin remain extremely low, bear market low. The Coinbase app is not roaring up the charts, it's quiet. Crypto isn't on the news majorly and is not really being chatted about in barbershops and at work around the water cooler, right? So this all means there's a major change taking place when it comes to demand sources. The buyers are corporate now. The institutions are here. The big money's coming in and accumulating while the retail money has not clicked onto that yet. That means big money will keep flowing. And besides all this, there's the ETFs. And of course, no ETF has been more successful than IBIT, BlackRock's ETF fund. It's currently 4th place among all, not Bitcoin, all ETFs for year-to-date flows, and it's 5th for 3-year flows, and it's only existed for a year and a half. That's insane. The demand has been gargantuan, and across all Bitcoin ETFs, their total value is now around $133 billion, while they're approaching 6% of the total supply as assets under management. And besides companies, we have governments like El Salvador, Bhutan, Pakistan, the UAE. We have 3 U.S. states now have bills in place for strategic Bitcoin reserves. Texas allocating their first $10 million to buy Bitcoin. Arizona, New Hampshire as well coming in. A lot is happening. So it's a lot of demand. And retail will come back to buy. What about supply? Well, before we get into the supply sources, guys, if you're trading the cryptocurrency markets, you're trading Bitcoin, you're trading Ethereum, you're trading Solana, you're trading dog coins, you want a great place to do that? That place is called BitUnix. No KYC, no VPN, meaning anyone, anywhere can trade on BitUnix. This is a great opportunity for you to be able to have a great exchange where you can go with deep liquidity to long the rips and short the dips. And they got some great sign-up bonuses right now. You can get $2,000 in trading bonuses. So the more you trade, the more of that $2,000 piece of pie you can get. And they got crazy deposit bonuses. This is absolutely nuts. Listen to this. Deposit $1,000, you get $200 back. Deposit $2,000, they're going to put $400 back in your account. That's crazy, man. Go check it out. Link down below in the description. Now let's talk about the supply. First of all, let's just reiterate that this is not gold we're talking about here. There are no new underground Bitcoin deposits to magically be found. We know exactly how many coins have been mined, what the future supply flow is like. So when it comes to Bitcoin miners, they produce on average 450 Bitcoin a day or 3,150 a week, or a little over 12,000 per month. But then just in 1 month, just this last month, public companies, not ETFs, just public companies bought 12,400 Bitcoin. That's more than all the miners produced. The ETFs bought more than all the miners produced. So the new buyers are operating with size, and they're currently scooping up insane amounts of Bitcoin, much more than can be produced in a month. Matt Hugan of Bitwise has explained that 164,250 Bitcoin is produced a year, but he expects that over the course of 1 year, ETFs will take in about 500,000 coins, corporations will buy another 350,000, and governments could possibly buy up to 2 million. The government equation remains to be determined. However, even without nation states jumping in, that still means demand is far higher than the number of new coins being issued, and that's not accounting again for retail buyers, on-chain whales, all this kind of stuff. If new demand outpaces new supply, that leaves existing holders to pick up the slack, which means it's sellers who are collectively setting the price, and psychology comes into play. Recently, there have been sellers at around the $100,000 mark. It's a nice big fat round number. You gotta book profit sometimes, right? Wait for $1 million. But what happens when those sellers get exhausted? Well, it's then that the dynamics of supply shock kick in. If miners can't meet demand and $100,000 sellers are done, then the price rises until we find another level at which enough sellers will actually step in. Bitcoin on exchanges and Bitcoin OTC desks is another important metric to watch. So to get more of an idea of the supply landscape, we can also look at how much Bitcoin is currently held on exchanges. And it's a pretty crazy view to take, with the amount of Bitcoin currently held on exchanges absolutely plummeting this year to basically a low that hasn't been seen for a since, I don't know, 10 years almost. Plus, this is the first bull run where supply is dropping while the price goes up. That hasn't happened before. At the same time, we've got supply on OTC desks drying up too, reportedly dropping from a peak of 486,000 coins 4 years ago, just 115,000 coins last month. That's where like Bitcoin miners and stuff are selling their coins, right, via OTC desks. That said, coins can, of course, move back onto the markets. Long vaulted stashes can resurface. There's always coins out there that can be sold. If the price is attractive enough, people will do it. But still, the trend right now looks very clear, and it's pointing towards Bitcoin becoming less available even as demand ramps up. Bitcoin as collateral is another thing. And it's happening and it's big. It's possible that there will be less need to sell Bitcoin in the future if it becomes easier to use it as collateral. And just this week, we've got a huge announcement. The U.S. Federal Housing Finance Agency made moves towards allowing crypto to be used as an asset when applying for a mortgage. That's huge. Also, the Fed came out and said banks can literally do whatever they want with crypto. They don't care anymore. So that means banks now can open up facilities so that you can get a loan in cash and put up Bitcoin's collateral. Crazy. Keep in mind too that 52.8% of the Bitcoin supply is in the hands of individuals. That means we have a very fascinating game playing out. How many will sell to corporations? How many will diamond hand forever? Does everyone have a price, and how high might that be? I'll sell some Bitcoin at $1 million. Be crazy not to, ma'am. These are all questions that will be answered in the coming years though. But in a supply shock, it's holders that are in control. And there's a huge amount of Bitcoin in the hands of straight up psychopaths who have no intention of selling their coins. And those people are in control right now. Thanks for watching.